Hello, ladies and gentlemen. Welcome to Equate Group's Earnings Webcast for the first half of 2021 financial year. Today's webcast is being recorded. Please note that the historical and current performance data in this presentation are not necessarily indicative of future performance. I am Wael Allahu and I will be your moderator for this session. Joining me on the call today are President and CEO Mr. Nasser Al-Dosiri, Senior Vice President Mr. Sudhir Shinoy, Chief Financial Officer Mr. Pisanu Tirmachaiwam, and Vice President Operations Mr. Gonzalo Beltran. This webcast will be followed by a Q&A session. At any time during the webcast, you may submit your questions through the Ask a Question tab. We expect this webcast to conclude in 30 to 40 minutes. After this call, the webcast and presentation will be available for replay at your convenience through this same link. Both the presentation and webcast will also be shared on our website under the Investor Relations section. As part of our transparency, we disclose our earnings and business performance, which is part of our commitment to keeping our DCM investors informed and updated with the latest information about our business. Today's presentation will start with an overview of global markets, Equate Group's financial performance in the first half of this year by our President and CEO, followed by a financial review of financial position, cash flow and profitability by our Chief Financial Officer, business and market highlights by our Senior VP, safety and sustainability update by our VP Operations. Following that, we will take your questions. As you are aware, Equate Group is a joint venture between Petrochemical Industries Company and Dow, with each holding 42.5% of the group. In addition to Bubian Petrochemical Company that owns 9% and Gorain Petrochemical Industries Company that owns 6%, both of which are listed in the Kuwait Stock Exchange. When we refer to the Equate Group, we are speaking of Equate Petrochemical Company and subsidiaries, as well as TKOC, the Kuwait Olefins Company. Now, let me turn the call to Mr. Nasser Al-Dosiri.
Thank you, Wael. Hello, everyone, and thank you for joining us today. On behalf of the Equate Group, I hope that you and your families are healthy and safe. Our first half results demonstrate the team's dedication and adaptability, which allowed us to continue to operate safely and maintain highly reliable production rates despite global challenges. The group remains in a leading cost position and continues to deliver all of our quality products to customers around the globe. We see strong signs of optimism as the world economy recovers from a challenging period, with a positive impact on prices and a return to normalcy driven by increased global manufacturing and industrial activity. The results also demonstrate Equate's resilience, enabling us to continue supplying customers and markets with high-quality products from multiple strategic locations. Reliability is at the cornerstone of our reputation and what our customers have grown accustomed to. This will remain so as we move forward in our business. Equate Group EBITDA margins are above 43% of sales, and more details will be shared throughout this presentation. Moving to slide 7. On the Equate Group overview, I'd like to provide a brief summary of the group. We are a global manufacturer and marketer of petrochemicals. Our main products are ethylene glycol, polyethylene, and polyethylene terephthalate. Our industrial complexes are located in Kuwait, Germany, USA, and Canada. The total production capacity of glycol reached 3.7 million tons annually. Our ethylene glycol production breakdown in the first half came from 35% from Kuwait, and 32% from Canada, and 23% from our U.S. operations, and 10% from other regions. Our Kuwait complex mainly serves our ethylene glycol customers in Asia, the Middle East, Turkey, and the Indian subcontinent. Facilities in North America serve customers in North and South America, as well as Asia. Our polyethylene business is produced in Kuwait and supply customers in North Asia, Indian subcontinent, Europe, Southeast Asia, Middle East, Turkey, and Africa. Our polyethylene terephthalate, PET, is produced in Germany and primarily serves the European customer base. Moving to slide 8, Equate Group maintains its leadership position as the world's leading supplier of ethylene glycol. Our global ethylene glycol sales are widely distributed across various regions, with North Asia representing the biggest sales at 48%, followed by the Americas at 20%, the Indian subcontinent at 17%, Europe at 11%, and the rest of the world representing 4%. In slide 9, we'll be looking at our polyethylene sales by region. We sold 34% to North Asia, 27% to the Middle East, Turkey, and Africa, 20% to Southeast Asia, 10% to Europe, and 8% to the Indian subcontinent. Going to slide 10 for the Equate Group financial results highlight. The first half results represents positive financial performance due to market recovery, increased industrial and manufacturing activities, and the group's ability to maintain leading cost competitive position throughout the period. The reported results of the first half of 2021 reflect the combined results of Equate Group, which consists of Equate and its subsidiaries, as well as the Kuwait Olefin Company, CKOC. Our revenue was up by 43% from 2020 same period. This is also a topic that our Senior Vice President, Sudhir Shenoy, will be discussing later in this webcast. Our EBITDA was $869 million, up by 112% from the same period last year. Sales volume stood at 2.5 million metric tons, 1% lower than the same period last year. Our combined net income was at $543 million, correlating to 338% more than 2020 first half results. For more details on the results, I would like to hand over the presentation to our CFO, Pisanu Sirmachawan, who will speak about our financial performance and financial position. Over to you, Pisanu.
Well, yep, thank you, Nasser. In the next couple of slides, I will take you through our financial results for the first half of 2021. Going through slide 12, we ended the first half with strong liquidity and financial positions. We had $729 million cash on hand, and our gross debt stood at $4.78 billion. That resulted in a net debt position of $4 billion. Our first half EBITDA was $869 million. Our rolling 12 months EBITDA was $1.4 billion, resulting in our net debt to EBITDA of 2.88 turns at the end of June. Slide 13 highlights our cash flow for the first half and our debt maturity profile. In first half 2021, our business generated $396 million of cash flow from operating activities. We spent $16 million on capital expenditure and paid a total of $358 million dividend to the shareholders. With that, our free cash flow for the first half 2021 was positive by 22 million. Looking at our debt maturity profile during the first half of this year, the group successfully tapped into the international debt capital market and issued a 7-year bond for the amount of 700 million. At the same time, the company also successfully completed 572 million tender offer of our 2022 notes. As of first half 2021, the Equate Group has a well-balanced debt maturity profile with optimum cost and stability. As you can see, the next debt maturity profile will be in March 2022, which we are very comfortable with given our cash flow and financial position. Turning to slide 14, let's look at our profitability. Driven mainly by an increase in prices and the world economy recovers from the challenging periods, our EBITDA margin once again has reached 43% during the first half of 2021, compared to 29% during the same period last year. This is also a true reflection of our low and competitive cost structure, together with our operational excellence, high asset utilization, and effective cost management. Equate Group sales revenue reached 2 billion compared to 1.4 billion in 2020, and our EBITDA increased to 869 million in first half 2021 compared to 409 million same period last year. Finally, our net income for the first half stood at 543 million compared to 124 million same period last year. Looking at the revenue in more detail on slide 15, we record a total revenue of over 2 billion, up by 43% versus the same period last year. We generate 40% of our revenue from North Asia region, 18% from Europe, 13% from Americas, 13% from Indian subcontinent, and 16% from the rest of the world. From a revenue by product standpoint, 66% of our revenue is generated from ethylene glycol, 22% from PE, and 8% from PET, while the remaining 4% is from other sources of revenue. Let's take a closer look into our volume and average prices for the first half of 2021. From an EG side, we are looking at a sales volume of approximately 2 million metric tons, which is 2% higher than the same period last year, at an average price of $662 per metric ton, 52% more than what we had last year. From the polyethylene side, we sold 363,000 metric tons, which is 10% lower than last year, at an average price of $1,213 per metric ton, which was up by 56% from what we had in the same period last year. Finally, PET volume was 146,000 metric tons, 10% lower than last year, at an average price of $1,078 per metric ton, 26% higher than what we had in 2020. With that, I would like to pass it on to our Senior Vice President, Sudhir Shenoy, for a market update. Sudhir, over to you.
Thank you, Pisanu. Moving to the market update, slide 17. Since the beginning of the year, there has been a positive demand and pricing trend. Globally, rising favorable indications show that we are still in the early phases of economic recovery. Prices are rebounding, but we expect some volatility. We continue to focus on safe, reliable production with outstanding operational effectiveness. Despite continuing concerns on COVID waves, the general economic recovery globally is progressing steadily, this time around led by the US and Europe, and continued growth in China, the Indian subcontinent, and Turkey. Polyester demand remains strong, with healthcare and packaging applications coming to the forefront as an enabler of society and economy. Equate has always differentiated itself with industry-leading partners. Our operational excellence, reliability, customer focus, and our global footprint. Looking at the market and the price trends of our products on slide 18, for polyethylene, we see a cautious buying activity within Europe, Africa, and the Middle East due to recent correction in prices, a declining trend in China and Southeast Asia that has bottomed out, and COVID resurgences in some markets. U.S. supply remains limited during this period. Weakened demand levels in Asia have caused suppliers to decrease their offers to increase buying activity. Moving to ethylene glycol, the China polyester demand continues to grow progressively with positive operating rates. With the MEG price recovery, integrated naphtha-based producers' margins have improved. However, the market is balanced on demand supply, leading to price volatility with each unplanned event. We have also witnessed an unprecedented logistic disruption to the PET industry, resulting in disruption to the global supply chain and leading to supply constraints and surging prices. The group was able to navigate through this period and remain disciplined, proactive, maintaining our current market position. We are also confident the group can maintain its profitability and overall stability by leveraging our sizable, advantaged, cost-competitive production capacities, our high asset utilization, and our global distribution platform. On slide 19, we showcase our commitment to innovation and sustainability to shrink our carbon footprint through our latest development, Viridis 30. Viridis 30 is a food-grade PET that incorporates up to 30% chemically recycled PET as feedstock. This product reflects Equate Group's alignment with the European Commission's Strategy for Plastics in a Circular Economy adopted in January 2018. The product reduces the need for virgin PET, which benefits the environment, business, and the community. The development of Viridis 30 is aligned with the EU's target to achieve 25% PET in packaging by 2025 and 30% by 2030. We've already seen significant interest for the product ahead of its commercial launch in the first quarter of this year. Thank you for your attention to our market overview. Now I would like to hand over to our VP Operations, Gonzalo Beltran. Gonzalo?
Thank you, Sabir. On slide 21, as we can see, all facilities around the world continued to operate safely. I'm very proud of the Kuwait Group's achievement in maintaining high standards. All of our industrial complexes in Kuwait, Germany, and North America have seamless integration of EH&S, dependability, and efficiency. During the first half, we ran our factories at full capacity again, with asset mechanical reliability and production at 98%. We have achieved over 29 million consecutive safe work hours without a day away from work. We recorded 0.05 recordable injury rate, 0 process safety and containment events, 0 motor vehicle accidents, and 0 notice of violation from regulatory bodies. And we are in full compliance with all environmental regulations. Looking at slide 22, the Kuwait Group continues to strengthen its commitment to sustainability standards through best practices and innovative products, such as the development of the Viridis 30. The Kuwait Sustainability Strategy 2025 is made up of 11 initiatives that are aligned with the United Nations Sustainable Development Goals, with the goal of achieving integration through 4 strategic areas: environment, economy, society, and health and safety. In recognition of the group's focus on prioritizing safety and the environment, Equate is Kuwait's first responsible care accredited and certified organization, the international voluntary initiative of the global chemical industry to safely handle products throughout all phases. With that, I would like to hand it back to Wael Alahu, who will moderate the Q&A session.
I thank our speakers for their presentations, and we will now take your questions. You may continue to submit your questions through the Ask a Question tab during the Q&A session. Please give us a minute to go through the questions. Hello, ladies and gentlemen. We have not received any questions. We now conclude this webcast for Equate Group's first half 2021 earnings. The presentation and the webcast will be available on our website soon. Should you require further clarifications, you may contact Equate Group's Investor Relations as per the information on our website at equate.com. On behalf of Equate Group, we thank you for joining our webcast today, and we wish that you all remain safe and healthy. Goodbye.